What's up guys, welcome back to a new weekly reflection. I'm going to be doing these at the end of every single week just to reflect on my trades that I've taken, my lessons, my mistakes. It was actually my first week trading live in front of some people, so a little bit stressful, but a lot of things that I've learned that I want to share with you guys. So without further ado, let's get right into the charts, into all my trades I've taken, and yeah, just reflect on the week, right? So on the higher time frame, my bias going into the week was bullish just because of these few reasons. So on the monthly time frame, very high time frame, you see that we have a monthly bullish precision swing point. So why is that? You see here the monthly candle here that formed the swing point on NQ is an up close candle, whereas on ES it is a down close candle, and also on YM. So this is a monthly bullish precision swing point right here, very big crack, and can be a reason that we form this higher time frame low and continue this bullish uptrend. So on the 1 hour time frame then, last week we also formed a weekly bullish sequential SMT, because if you see here, you compare YM with NQ, you see that between last Tuesday and Wednesday, you see that we take out the low on NQ, but not on YM. And after we formed a very big displacement, meaning that this SMT is confirmed and is actually a crack that we can use, right? So monthly bullish precision swing point together with a weekly bullish precision swing, weekly sequential SMT. This forms my bias, right? We open the week right here, form a new week opening gap, and this is the first day that I'm trading, right? If you're gonna take a look at the economic calendar, let me post it right here on my chart. You see that on Monday we didn't have anything, then Tuesday we have news, Wednesday nothing, Thursday we had a lot of news, and then Friday also at 4 p.m. That's my time, so that's 10 a.m. EST. So first day I was trading on Tuesday, didn't have time to trade on Monday, and it's also just lower probable because we had no news. So going into the markets on Tuesday, like I said, my bias was bullish. And we have this new week opening gap. I'm maybe anticipating a retrace into this new week opening gap because that's usually what happens. We fill the new week opening gap. In this case, we are very bullish on the higher time frame. Like I said, this monthly bullish precision swing point and this weekly bullish sequential SMT together with us just being very bullish. I mean, you don't want to short this market, right? So that's why I was bullish going into the week. And then on Tuesday, this is the price action that we've got. Let me go to Tuesday. A lot of people, they say like, oh, why wasn't Tuesday bearish? Because we had a weekly bearish, a daily, and 90, but why didn't we go down? Well, my theory, what I've been thinking here is that there is no way that you should be taking any shorts because there's no displacement, right? So if we have a 90-minute sequential SMT on the bearish side, I need a 5-minute displacement. That's my strategy. And if you go on the 5-minute, there is not any displacement. You see, we opened the market right here on Tuesday. Okay, we form maybe a very bearish candle sweeping the highs here, but there's no displacement. We still respect discount. We are not really displacing lower. This is just retracing to discount of this range right here. So there's really no reason to be looking at shorts. But yes, we need to keep in mind we do have a potential weekly, daily, and 90-minute bearish sequential SMT. But we also have some ugly daily bullish and 90 bullish. So because my higher time frame narrative is bullish, I'm just going to be focusing on longs, right? Also, if we are trading at the open above the true session open, above the true day open, that means we're in deep premium. But in very bullish markets, price doesn't always have to come to discount below the true opens or just price-based discount. It will just continue, right? If we're very bullish. So that's exactly what happened. For me, it was a no trade day. Yeah, the market opened right here. We didn't really have anything to play with. We just swept this low. We have a micro 90-minute. If you have like bearish sequential SMTs and bullish ones, what should you trust? The bullish ones. Why? Because we are not in an uptrend. We have a monthly bullish precision swing point, a weekly bullish SMT here from last week. So I'm just gonna trust the bullish ones, right? Nothing on the bearish side is confirmed. So yeah, but no clean setup. You see these SMTs are very ugly with YM. Don't want to be trading this. So that was Tuesday. No trade. Let me just double check. I did take no trades. Yes. Okay. And then we go to Wednesday. This was my first day trading live. Very stressful, to be honest. But yeah, I really think I need this to go to the next level. Really helps me stay accountable. Basically, what we had on Wednesday is a weekly bullish and a weekly bearish. I'm not going to show every sequential SMT comparing the ES, YM, and NQ. It will just take too much time, but you guys get it, right? Watch my strategy, watch my quarterly theory videos. This is what I use on a daily basis, right? So weekly just means that we have SMT between the previous day and the current day, or just any days in the week consecutive. So let me go to the price section on Wednesday. First thing I always draw out is the true opens after I've established my bias. My bias is still bullish on Wednesday, just because of, again, this weekly bullish, monthly PSP, new week opening gap. We're very bullish. We don't even retrace to the new week opening gap. I really think these highs are next. Look at this clean higher time frame liquidity. So I'm just not forcing any shorts if there's not any clean short setup, right? So weekly bullish going to do into the Wednesday, and then a weekly bearish as well. What am I trusting? I'm trusting more the weekly, right? Because higher time frame for me is bullish. My bias is bullish on the higher time frame. So yes, I'm taking in mind this weekly bearish, but if there's nothing done clear on the bearish side, I'm not taking any shorts. So let me go to the 1 minute time frame on Wednesday. What do we do at the market open right here? If you see a red dot, it just means news for me. I just try to mark it out so I know when did the market open. Also, when there's 8:30 news, I will put a red dot on there, or 10 a.m. news, just so you know, right? So at the open, the only nice trade we could have taken on Wednesday is this micro bullish here in this 50-minute gap, right? We are in a higher time frame bullish bias, in my opinion, like I said, with the confluences I showed you in the beginning. Now we just retrace on the lower time frame towards this gap. At the open, we form micro bullish sequential SMT in a 50-minute gap. You guys know this is a strategy of mine, right? This is a combo that I can use. Let me just quickly open up my strategy again. So here you can see one of my combos is I need to have a SMT in a gap, right? And the SMT gap sync looks like this. Micro sequential SMT needs to happen in a 50-minute key level. And that's exactly this setup right here. Micro in a 50-minute key level, below the true session open. We are higher time frame on the bullish uptrend. And this lowers its liquidity, forms a really nice draw on liquidity. So yeah, that was a nice trade. I think maybe I missed this because I was streaming too late, called this out. I was also stressful to take this, my first trade on live stream. But anyways, I think this could have been a really nice trade. So then what do? We sweep the range highs. We still have this weekly bearish, and then we form a 50-minute precision swing point. So this 50-minute precision swing point, this can be a reason that we reverse from here. As you know, PSPs, they are just indications of reversals. We go down here. Now we are tapping in an even lower gap. This is another 50-minute gap. This is actually better to use if you want to trade longs. But if you already see something here, you can take it, of course. But so we retrace it back here. And then we form a micro bullish, then a micro bearish, and from here, I took a little short on stream. I think when we reversed this 1 minute, like this, just because I thought, okay, weekly bearish, 15% swing point, really big displacement after the open, after we swept buy side. Now we form a micro bearish. This is a really big displacement. You look at all this chop, right? All this chop. And then we have another micro, and then we displace very harsh lower, right? So this was a trade against my higher time frame bias, but I think it's valid because we form micro bearish in premium of this range after we dropped off after the open. We respect premium, have a micro bearish. This also was just stepping above a true session open. So I think a short here towards this low would have been great. That's what I've taken. A little break even after because I got stopped out on my second TP at break even. And I closed my trade basically when ES took this low. Because when ES takes this low and we form 90 bullish now, then I'm switching my bias, right? I'm more bullish biased, but just at this time of day, it makes sense that we're going to sweep this low because of this micro bearish, this weekly minute 15% swing point. We just took a buy side, so I think we're going for sell side, right? You see this stacked up lows here were nice, and that was basically what I was thinking. But then, again, if I'm trading, let me just pop off my trading system again, just referring to this because this is my gold basically. This is what I need to use every single day. You see here, close position if opposing confirmed cracks and context wins, and this is exactly what happened, right? We have the micro bearish, but now we form a 90 bullish, so I'm switching my bias, right? And when I'm trading against my higher time frame bias, I always need to close a trade at the low-hanging fruit. And so because ES already took this low, I'm closing this trade. I'm never going to be targeting all these lows to the left because, again, my bias is bullish on the higher time frame. But then from here, I think a nice trade would have been after this 90. We also do this in a 1 hour gap. So a 90-minute bullish sequential SMT in a 1 hour gap below the true session open. Higher time frame bias is bullish. I think this could have been nice after we inverse this 5 minute, right? So a 90-minute bullish sequential SMT, I need a 5-minute displacement for this to trade it, right? So 5 minute gets inversed right here. I think along from here towards this high would have been nice. The RR was bad, so I didn't take this on stream. Normally I don't really care about RR, but yeah, it's less than a 1-to-1, so I'm gonna just skip this. Maybe if we come back to this gap, I would have taken it, but we didn't. We just go up. So that was my thought process on Wednesday. Not really damn clear. You see, basically, we have this whole like range, and it's you can still trade it, but it's just hard, right? You really need to watch out. Again, like I said, if we have a bear setup, watch out because we are essentially bullish on the higher time frame. You need to be like hyper focused because these SMTs happen back to back and it's hard to navigate, but at the end it all makes sense, right? And this is what's building me conviction in my strategy. I know at the end I always can know why I did something wrong because I mean it just happens over and over again. I know my strategy works. I just need to follow it every single day. So nice following my rules on Wednesday, just a break even day. I made a little profit on this short towards this low when ES took out this sell side target. But anyways, yeah, that was my thought process. Let me now go to Thursday. Thursday was a really bad day. I had some problems with my streaming setup. I was trying to record and OBS gave me some problems, so I didn't end up streaming that day and I was just not really focused. I was frustrated that I couldn't stream, and you guess it already. I just overtraded and I breached my daily loss limit. Not my account, but my daily loss limit got breached on 2 accounts. So minus 1K something, really bad. But that's really what I need to focus on right now. Following my rules. Yeah, it's just bad, man. I'm almost there. I'm almost there to become profitable, but I just need to follow my rules. And this live trading, it just helps me so much. You see, this is the only day I didn't live trade. And okay, it was a choppy day. That's also a reason. But a choppy day should never be the reason that you breach your daily loss limit, right? So I should have just stayed out, recognized the market conditions, and yeah, just not taking any trade that day. So you see, Thursday was a very bad day. We had a lot of news that can be nice for a high probability day, but this also plays a role. This range right here in London. You see, pre-market on Thursday on London and Asia session, we form a very big range. And if we form a very big range, then usually New York AM is not going to do much, right? It's just going to consolidate like we have right here, and then a PM will actually make the move. So yeah, I didn't notice this. I should have been more alert on this. But anyways, so as you can see, Thursday, if I hop on my chart drawings, we had a weekly bearish. Still, we have a daily now at the open on Thursday and a 90 minute. So I was kind of looking for shorts. But again, if there's a 90 minute on the lower time frame, what do I need to have for taking shorts? A 5-minute displacement. And so you see, this is not really displacement, right? This candle looks really bearish. I was going to short here, and then I basically got stopped out because this next 5-minute candle, it closed really, really bullish. You see, this is just not clear. Stay out of this market. If we have a 5-minute displacement down, you should have been seeing like a fair value gap right here, a very clean displacement, but that's not the case right here, right? This 5-minute candle, also on the 15 minutes, if you take a look, this still looks very, very bullish. You see here, all these wicks here. Let me point it out. This bullish wick, then this bullish wick, then this bullish wick. Sure, this can become drawn liquidity for later, but now at the open, what I'm seeing, very, very bullish order flow. Again, on the higher time frame, I'm still bullish. So yes, we had this daily and 90-minute bearish sequential SMT, but no displacement, no clean setup. And especially if I toggle on the drawings, so let me just delete these ones because it was not them clear. We had a large London range, so that could be a reason for a chop, which happened at the New York AM. The drawn liquidity looked pretty nice on the lows, but even nicer on the highs. So I'm more bullish biased. I should have been more bullish biased right here. I just overtraded here and didn't really focus, but now I realized that the draw here looked very, very bullish on the highs, low resistance liquidity. This could have been a nice market maker buy model, which could have been an entry in New York PM. We just stepped this like 1 hour fair value gap on the higher time frame. And I mean, we just sweep these lows, range lows, sell side right here. Yeah, long should have been definitely the case here on Thursday. But yeah, I was not focused. What else do we have here on Thursday? Let me see. So like I said, we have this 90 and daily. We go down right here. But then immediately we got this 90 and micro. So what makes most sense? Yes, you might say the daily is bigger than the 90 and micro, but because we are on the higher time frame bullish, because we do this below the true opens, and we don't have the setup above the true opens on the short, then this context makes most sense to be bullish, right? Yes, very big 1 minute displacement with a 1 minute SMT fill, but again, still after we sweep this low, we immediately have this strong 1 minute bullish up candle, right? And then we immediately after form a 1 minute SMT fill. So bearish 1 minute SMT fill followed by a bullish one, just delete this one, right? So long should have definitely been the case right here. 90 minute micro below true opens, clean drawn liquidity on the highs. We tap a 1 hour fair value gap on the higher time frame after we sweep this low right here. Yeah, very choppy day, but it can still be navigatable, if that's even a word. And I think a long should have been right here and at this 1 minute SMT fill, or just as soon as you saw this 90 and micro, this 1 minute, you could have just placed a long, in my opinion, right here. Stop should have been at the micro here, and yes, it was choppy, but still your stop loss was getting respected, and then you could have been taking your TP right here. So yeah, that's what I was seeing on Thursday. Very, very bad day, as you can see here. Not really good, and this is also the only day that I have been not live. You see, Wednesday, Friday I was live, just taking my risk, and then bam, on Thursday not live, was FOMOing, I had a bad day, not focused. I should have just stayed out of the market. This is what trading will do to you if you keep not following your rules. Even if you know more times than not where the market will go, you will still not become profitable. I'm the living proof of this. Please guys, follow your system. Most important thing. So that was Thursday. Let me take a look on Friday. Friday I was live again and I took a really nice trade, copy trade between two accounts. So Friday was actually a day where I took shorts, even though I was bullish on the higher time frame. And why? Well, weekly bearish followed by a 90. If I'm trading like stacked sequential SMTs, I'm gonna open up my strategy again. You see higher time frame SMT plus lower time frame SMT. My rule is that for all these combos, you can skip only one cycle max. So if I see a weekly, then it should either be a daily or a 90 minute. So a 90 minute is lower probable. Daily should be better, but a weekly and 90 is still a nice setup. So going into the day, what even made me more bearish is not just because we have this weekly and 90, right? First of all, I need a big displacement. That's what happened right here. On the 5 minute, we really displaced lower, but especially because we cleanly do this above stacked true opens. Above the true session open, above the true day open, we formed this nice 90 minute and weekly we had from earlier. And also we had there a 5 minute SMT fill, because let me show between ES and YM here on Friday. You can see that this 5 minute, you see here, this candle on ES leaves open. This gap is getting left open, while on NQ not, right? So 5 minute SMT fill, clean turtle soup, forming a 90 minute sequential SMT just before the open. So at the key time of day, above the true session open, above the true day open. Yes, higher time frame is bullish essentially. I should have been focusing on longs, but that doesn't mean that the market can't retrace, right? The market will always retrace towards discount just to breathe a little bit, go below true opens, take out some nice low resistance liquidity, and that's exactly what happened right here, right? So I took a short right here after this 5 minute displacement, because if I see a 90 minute, I need a 5 minute displacement. That's what we got right here. 5 minute displacement, short right here towards then Asia and London low. This is Asia, I think, and then this is London low. So why not this low? I called this out on stream. You can check my stream. I traded this trade. Yeah, I think that's good. Why not this low? Because if I'm having my first TP is always at low hanging fruit. My second TP should be a close, clean, higher time frame draw. So it should not be too greedy, but just reasonable to take it out after my TP1. So that's why I don't take this low as my third TP or second TP. I'll only have like 2 TPs, just because I know higher time frame still bullish. If I'm trading against my biggest confirmed cracks and context, so against the higher time frame bias, I should have been taking profits like immediately, right? So that's why I'm out right here. Took profit there. If I took this short, my stop was obviously at this SMT high, and as you can see, it was really, really bad on Friday. We had a lot of chop. I was like hesitating on stream to take off my trade, but essentially I was still seeing that we respecting premium of this lower time frame range that we formed after this displacement, and we're still respecting this 1 minute gap. And so I just still trust my bias, because there was no reason that we're gonna go up from here. No bullish sequential SMTs, now no bullish context at all, other than that we just tap like a 50 minute. But that should not be a reason that we go up on this session, right? So hopping off this, my charts things right here, the open, we pushed from this micro here. We formed this 90 minutes, can delete this. At the open, we displaced right here. So basically the pre-market, it made the crack. And then the open, which is essentially a news event at 9:30, just distributed, right? This is what I want to see. And then we have this chop, taking out some internal buy side, tap this 1 minute again. And then after the SMT, after like 50 minutes, I was going crazy, I'm not gonna lie. We finally have this displacement. And I think maybe a second entry that I could have taken is after this clean move. And then TP right here, and then second TP right here. So you see the difference, right? You see the difference between this chop and then this clean 1 minute displacement candle forming a fair value gap. You just know that this was the manipulation then, and that this is the final distribution leg of this market maker sell model then. So you can still have bearish market maker sell models if you're bullish on the higher time frame. Just make sure that you're then taking profits at low-hanging fruit, that you're not too greedy. I mean, if you take this whole range on the higher time frame, you see here, this is already discount, right? So that makes sense that you should take profits right here. Higher time frame still bullish, so obviously after this, then I expect a retracement or just really continue higher like we did here. So that was my weekly reflection. Thank you guys for watching. If you enjoy this, definitely like up this, because then I will be doing these every single week. It helps me, it helps you. If you want to see me more trading, then I'm doing live streams every single day. I want to do this, but maybe just doing it like 2 or 3 times a week now to just build it up. And yeah, you can ask me anything there. You can watch me live trade, and hope you enjoyed this. I'll see you guys in the next stream or next weekly reflection.